Huge news. TD is now the 6th largest bank in the United States, which could also mean that it could be number 1 very soon in Canada. This is huge news. What just made this happen? Well, basically, they just purchased a massive bank in the United States. They are buying First Horizon Bank. This is absolutely huge news. It is paying a 37% premium for First Horizon Corp in a $13.4 billion deal that gives the Canadian bank an entry into the southeastern market and elevates its scale to the 6th largest U.S. bank. This is huge news. Now, why am I saying this is so massive? Well, anytime that a company grows, and whether it's growing from being like buying other banks or businesses or whatever, or by maybe producing a new product, there's always that chance, especially if it's a dividend-paying stock, to pay higher dividends. Because this bank alone is going to give them massive earnings per share boost, which will then give them much larger dividend possibility. Now, if this is the case, you're probably not going to see a massive growth in dividend right away. And what's going to happen is, of course, it's going to have to go through the regulators. Anytime that there's a massive purchase like this, it has to make sure that it makes regulatory requirements. And, of course, so far, at least CNBC says that that's going to happen. And if it does happen, it becomes the 6th largest U.S. bank and probably one of the top banks in the entire world, really, because at that point, that is a massive, massive company. So, what does this all mean? Well, if there's an earnings per share boost and an earnings boost overall, then at that point, you're going to see higher earnings, which then means a higher dividend, which then means a higher stock price. Basically, it's a good business to run right now. BMO also just made a massive purchase down in the States too, but they're nowhere close to this level of purchasing power. But damn, this is amazing. So TD does say that it expects the acquisition of the Memphis, Tennessee-based bank to immediately add to adjusted earnings per share after it closes as expected in the first quarter of 2023. As I was mentioning, it's not going to be right away. This is about a year off. However, the bank is targeting about a $610 million in cost synergies. This is huge. Including the First Horizon business, TD's U.S. franchise will have about $614 billion in assets and a network of 1,560 stores. They call them stores now, not branches, because, of course, as we all know, they are really looking at their services as products now and not really as financial stuff. They are more like products because, of course, they want to make more money. That is the whole main goal of a bank. This is literally the best business to be in my opinion. With nearly 11 million U.S. customers across 22 states, with assets of $89 billion as of December 31st. First Horizon operates 412 branches with more than 1.1 million customers or consumers, business and commercial customers in 12 states. Populations in First Horizon's markets are seen growing about 50% faster than the U.S. national average. This is actually a massive point. And that is the area that this bank really operates in. It's in the southeast. What does that mean? And just to make sure, southeastern market. What does that mean? What does that really mean? Well, first off, who and what and where are people moving to right now, and who are these people? Well, we've seen massive outflows of people in New York going to Florida. We've seen massive outflows of people in California moving to Texas and Florida. This is the market that this bank currently is in. The reason why these populations are getting bigger is because people are moving out of Democratic states and moving to Republican states because they're getting ticked off at the high levels of tax. Which then means these are not your average mid-range or middle income or low income people who are moving into these areas. You're seeing large net worth individuals. That's why this is actually, in my opinion, a very strategic decision by TD. Because these high net worth individuals are moving into these areas, they may just end up putting their millions or hundreds of thousands or whatever it may be into First Horizons, which is owned by TD. And if they end up doing that, remember, with banks, they can loan out 10 times what they have in. So for every dollar they get, they can loan out 10 times and make huge money. Especially with interest rates rising as well, they could make an absolute killing with this purchase. I think this is probably one of the best purchases that TD has ever made. Ever. And in my opinion, this could be massive, massive, massive news. For those who are worried about the Canadian market, for those who are worried about what Trudeau is doing or what Russia is doing or what even just these housing prices and the potential crash of housing might have over here in Canada, guess what? This is now a bank in Canada that is expanding. They already had U.S. businesses, but now they're massively expanding into the U.S. market. And we have to remember that they were already having a footprint in the U.S. So that now those high net worth individuals who may have been from Massachusetts and those areas where TD is, that when they move their assets over to potentially First Horizon, they're now maybe moving out of a smaller or mid-sized bank into a massive corporation called TD Bank, Toronto Dominion First Ontario Corporation. Huge. But here's the stock. When this news went through, obviously First Horizons Corporation, their stock went up 30-something%. However, TD's stock went down. Now, this is something that generally happens once in a while with a purchase of another company. However, right now the whole entire sector is down because of what's happening over with Russia and, of course, the dummy who wants to nuke the entire world. However, with an average volume of 5.8 million shares, it's super easy to get in and out of. It's got not that bad of a dividend. However, it is lower than the recent historical average of the dividend. So I think that dividend could rise already. And of course, in a year when all of this purchase goes through, this is going to be absolutely massive for this stock. Keep in mind, its PE ratio right now is a bit high versus the recent historical averages as well. So that may mean that there could be some downside or just not as much of an upside potential to the stock in the near term. However, in the long term, it does seem pretty promising. If we look at the 5-year or so chart, this is about roughly maybe a 10-year, 1, 2, 3, 4, 5, 6, 7, 8, 9-year chart, we are seeing that it didn't do too much between 2018 and 2019. Of course, there was that drop there because of a virus. And of course, since then, it's had some pretty nice of a run. It's had a double bottom there, and it's continuing to the upside until recently when the little baby over in the other side of the world wants to hurt the entire world. And of course, this is going to recover. I'm not too worried about anything that's happening over there. However, it is still something to keep in the back of your mind. There may be some more downwards movement with this stock, mainly because of whatever that person, you know who it is. I probably can't say it on a YouTube video, but you know who it is, and it's the guy who wants to nuke the entire world because he's not getting his way. So, there may be some downside to this stock. If there is, then it's a fantastic buying opportunity in my opinion. I think that it could come down a bit more because the PE ratio is already pretty inflated. However, it seems to be pretty solid. They did recently raise their dividend substantially, which is nice to see. They do pay every quarter. They did freeze dividend raises for a while between 2020 and, of course, 2021. That was because they were not allowed to raise their dividend due to a virus. They've also had 4 beats in a row, and that's probably going to continue. I would think that it would. And of course, this is something that I did mention right here about a year to 2 years ago. When I first started this channel, I said that the banks are really cutting back on staff and they're really starting to have a skeleton style crew, and that is going to really promote a higher revenue or higher earnings in the future. And that is exactly what we are seeing. We are seeing almost a double in earnings and not necessarily anywhere close to a double in revenue. What does this mean? Well, guess what? All of those cutbacks they kept, they figured out that they could actually run a business with less staff and less overhead, which means that they have higher earnings, again, because now they're going to have higher dividends, most likely because of those higher earnings. So is it a good time to buy TD? I think that there could be some more downwards pressure, potentially depending on what happens over in Europe and Russia, and of course, Mr. Vladimir. But anyways, I think that this could be a fantastic stock to start getting into, start purchasing while it's on its way down, because you never know when it could bounce back up. We seen the other day when there was good news that came out of Europe that basically everything went up and CIBC's stock pretty much went crazy. And I own a lot of it. I own a lot of TD. TD and CIBC are my largest holdings, just as to be totally transparent. I own pretty much all except for Royal Bank of Canada when it comes to the big 6 banks. I own all 5 out of 6 of them. So anyways, these are my thoughts. Remember to try and do your own research. Don't trust a random person online. Somebody like myself could be trying to pump this stock. I'm not. I'm just basically reading what's on the internet. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.